Dhirendra ji. How do you see this? How do you explain it? What should be done? And a lot of SIPs are also being cancelled, which is really bad.
Investors are overreacting, and that overreaction itself is the risk, not the market fall. The market fall is normal. For last, Nifty fell 15% from September 2024 peak. That sounds scary until you realize that the market was up 80% in the preceding 4 years. The 15% correction after that kind of rally is not a crisis. It's basic arithmetic. SIP inflows are still above 30,000 crore per month. But the worrying signal is that SIP cancellations are outpacing new SIP registration in certain months. The people stopping SIPs are overwhelmingly, relatively new investors who have never seen a proper correction, big decline in the market. And this behavior gap, investors can, investors simply earn less. In fact, if they invest because they buy after rallies and say, you buy high and sell low, that is not that isn't a new insight. In fact, our research keeps, reminding us that shows that, the gap is often 4-5% between what the fund generates and what investors earn. So market gave you a 15% discount, and if the response is that, cancel the shopping trip, that tells the problem that, it was never the market. It was always the investor. I think they have to really conducting yourself behaviorally through these times is important for you to be aware of.
Okay. So one thing is for certain, SIPs should not be cancelled. We should be in an opportunity or ability to buy this dip that the market is giving. Dhirendra, there is also an issue that there has been an absolute lack of earnings, especially on mid caps and small caps earnings growth, as also to some extent large cap companies as well. In this kind of an environment, what is your advice to mutual fund portfolios holders? Should they continue in large cap, mid cap, small cap, flexi cap? What should they do to navigate this uncertainty?
One important thing to note is that, companies have done well over the last 4 or 5 years. Earnings are cyclical. Companies, if you look at manufacturing companies, commodity companies, they go through investment cycle. It takes time. It takes time for it to fructify. Earnings cyclicality is one thing. Ability of a company to earn money is another thing. Third is to actually be able to grow it. And nobody has a precise sense of when it will turn around. And there are many factors to it. I don't think it is, a mutual fund investor can benefit by worrying about this, that when earnings will start investing. In fact, for every mutual fund investor, important thing is that market is not doing, going up by leaps and bounds. It has come down by 15% from its, last September peak. You are still investing. You are investing for the long term. Long term means 5 years and more. And it's good news that, you are not buying at the peak and every new money is getting at a higher level. And if you accidentally started a SIP, that it should continuously do well. And you will always make money with every SIP installment over any time period, and it will never go down in value. I think you are at the wrong place. You should look at, if you are getting upset with this decline, maybe you should not be there with it. It will typically be a problem with somebody who has not been guided properly, or somebody who has accidentally come and started his investment. You should start with some conservative vehicles that will keep your anxiety in check, and earnings will have its own cyclicality. There are companies which have been able to build their earnings base to such a level that from here to grow at a handsome pace, it requires something substantial economic momentum, greater stability. So there are headwinds in terms of the geopolitics, and 20% of our technology services business is dependent on something where everything has become so uncertain, or more, at least the anxiety level for the earnings outlook for these companies.
If you like the video, do like, comment, share and subscribe.